Hi, everybody. Welcome back to Aux Talks. It is Friday, December 1st, 2023, entering the final day of the final month of 2023. Wow, what a roller coaster ride it's been this week. Today in the markets, they finished in the green. The Dow, the S&P, and the Nasdaq. Cryptos all finished higher. Gold was a standout performer again today. I believe it closed, well, it depends on what you look at, but it definitely hit all-time highs today. Whether it closed at the all-time high or not, it depends again if you're looking at CNBC's number or Fox Business number or Kitco's number. But it is performing extremely well. And obviously it's the same reason the markets went up today, because the markets are pricing in the fact that the Fed is going to start cutting interest rates the first quarter of next year. I'm not going to go into analyzing the Powell stuff today. I'm sure that'll be all over a lot of the other channels and the media sources. But, I heard him say that it's premature to start discussing rate cuts. So there were some other dovish comments, I guess, mixed in that the markets seized upon and ran higher. So the cheerleaders are out. We'll have to see how this plays out into, we have a Fed meeting in December 13th, I believe it is. Well, look, the Fed has been out saying for a long time now that they have been forced to aggressively raise rates to curb inflation. Now, what is that going to do if they actually start cutting rates? By common sense, that would then tend to, would it not, increase inflation again? If they're trying to lower rates to decrease inflation, if they start cutting rates, is that not going to increase the inflation? We know for sure that if they start a rate cutting cycle, it's going to kill the dollar. It's going to continue to devalue your currency and your hard-earned money. Not to mention, if they do start cutting rates, they have just, or they will be undoing everything they've been trying to accomplish for the last year or year and a half or 2 years. So let's see how this plays out. Obviously, if there is a rate cutting cycle that starts, gold is going to continue to march higher, as well will silver, as well will probably cryptocurrencies. So I think it's too early to place your bets on this stuff right now. Thank you for watching the channel. Thank you for your comments. Thank you for subscribing, liking the videos. I would ask that you please share them far and wide with your family and friends so we can, again, educate people as to what is happening. I saw a few articles today that I thought were important to address. The first one is called Blackstone's flagship BREIT, Gates redemption request for 13 consecutive months. It says Blackstone has limited investor redemption requests from its $64 billion commercial real estate trust for high net worth investors for the 13th consecutive month. It says, however, the good news is the backlog is easing according to Bloomberg. According to a shareholder letter, Blackstone Real Estate Income Trust, the BREIT, recorded investor outflows of $1.8 billion in November. The fund fulfilled 67% of its requests, and demand redemptions fell to the lowest since September of 2022. So what that says is less than 7 in 10 people that wanted to pull their money out of this real estate investment trust, this Blackstone REIT, were not able to do so. And we're talking about high net worth individuals. Why are high net worth individuals doing substantial drawdowns from these real estate investment trusts, and specifically this one? Is that a precursor of things to come on the horizon with the commercial real estate market? I would suggest that it absolutely is, and we should be paying attention to this. It says BREIT limits redemptions to 2% of net asset value monthly and 5% quarterly to curb sudden runs. This process of gating investors, gating meaning preventing them from getting their money, has been ongoing for 13 months due to surging fears of high interest rates and deteriorating conditions for commercial real estate markets. And I would proffer that nothing has changed. This market euphoria today has not changed a thing. The underlying fundamentals are terrible, both in the markets and, as we also know, in the real estate market. And this is proof in the pudding. You have high net worth individuals drawing down these the investments they have in these REITs. It says the fund is heavily invested in housing, such as multifamily and student housing, as well as industrial properties and data centers. It says the good news is, as explained by a Blackstone spokesperson, investors who requested to pull their money out of the fund 2 months ago have received nearly all of their money back. And if they are defining nearly all of your money back as 67%, I would strongly question the sanity of people that would put their money into these REITs knowing that you can't get it back if you need it. And they will control the pace at which these refunds or these redemptions are issued. It says the performance of the REIT has been dampened by deteriorating macroeconomic conditions. Listen to this. This REIT has only delivered 2.3% return this year through October for high net worth investors. Last year, it delivered 8.4%, and in 2020, and since its inception, it has routinely delivered 11.3% annual returns. 11.3% annual returns history. This year through October so far, only 2.3%. So that should tell you something about the performance or lack thereof of the underlying assets. Just keep a watch on this. It's important. Next one, U.S. boat sales out of the Zero Hedge today. U.S. boat sales set to sink to decade low. Americans panic bought boats, jet skis, campers, UTVs, ATVs, and anything with a motor that can be ridden in the great outdoors during the pandemic. And oceans were flooded with shiny new pontoon boats and 100,000 plus wakeboarding boats. Much of the boat panic buying was seen in 2020 and 2021 when interest rates were at rock bottom. Now the interest rate environment has frozen the industry as new and used boat sales are expected to plunge to a decade low this year. You know, everything is blamed on the interest rates. Absolutely, that has a lot to do with it, because if you're going to finance one of these toys, you're going to be paying more of a monthly payment with a higher interest rate. But what they don't address in these stories is the fact that people just don't have the funds to buy them. Even if you still have to put some money down, they don't have the money to buy this stuff. There is no free pandemic money dropping from the sky anymore. Whatever people put aside in savings during that period of time in 2020 or 2021, they've now blown through that to pay for necessities. It's going to be interesting to see in the coming months and years when the defaults start rolling in. Not only is there the people not buying the new stuff or the used stuff, but how about the people that have acquired these items or these vehicles and will no longer be able to afford to make the payments even at lower interest rates. So I bet we see a flood of those people that can't afford the toys anymore also hit the market, along with a big downturn in the industry as a whole with new and used UTVs, ATVs, jet skis, things of that nature. Says Bloomberg cites new data from the National Marine Manufacturers Association, the leading trade association representing boat, marine, engine, and accessory manufacturers, which states that 1.4 million new and used boats were sold in 2021, up 16% from 2019. This followed several years of low-digit growth. Fast forward to 2023, the NMMA expects the industry will only sell 269,000 new powerboats, about 900,000 used ones, the lowest dating back to to 2011. And we all know what was going on in 2011. Everything was crumbling. So these are scary figures. It's no surprise to me. It's probably no surprise to you either. So I think the days of seeing the freeways packed with $100,000 pickups towing $250,000 wakeboarding boats is probably coming to an end. The last thing I want to address, it's a depressing topic, but it's something that should be spoken about just briefly here. This was out of Zero Hedge a couple days ago, and I've been wrestling with whether or not, actually it was yesterday, whether or not I want to address it, but we should hear this statistics. It says U.S. suicides hit record high in 2022. And it says an estimated 44,449 people committed suicide in 2022, which is 3% higher than the 48,000 people who did so in 2021. I believe they misprinted that number. They're saying suicides are 3% higher in 2022 than in 2021. This is according to a Wednesday report published by the Center for Disease Control and Prevention's National Center for Health Statistics. The suicide rate in 2022 was 14.3 deaths per 100,000 people versus 14.1 per 100,000 in 2021, marking the highest rate, listen to this, highest suicide rate since 1941. It says the numbers will likely be higher in the final report due to lagging suicide reports. According to the authors, reporting of suicides in particular can be delayed due to investigations regarding the cause and circumstances surrounding the deaths. And it talks about demographics, age groups, and all that. I'm not going to go into it, but the point is that we talk about people suffering in this country. People that over the last year or so, as the rates have continued to go up, as everything has become less affordable, it puts more pressures on the family and the breadwinners to perform in the face of just choking economic conditions. So look, for the people that decided that it was better to give up the fight, it's very, very sad. Obviously, we can't put ourselves in those people's shoes. There's a lot of mental illness in this country as well. But look, it seems to me that these statistics are only going to keep going up. Depression levels are going to keep going up, and people reach a breaking point. So, we've discussed this before briefly, checking on the ones that you love, especially those of your family and friends that are alone, especially during the times of the holidays. It becomes, for many people, not a joyous time, but a time of despair and a time of depression. So don't assume that everybody has a situation or a family life or a home life that you do. Let's look out for those that usually there are signs. I'm not a doctor, but usually there are signs of these things with people before the event happens. So with that being said, I hope all of you have a great weekend. I think I'm going to be doing a video with Jeremiah Babe tomorrow, so I may or may not get a separate one of mine uploaded. If I don't do one tomorrow, I will plan to see all of you on Sunday. I'm going to go get a workout right now. I did some jiu-jitsu this morning with the guys for about an hour. Going to go get an hour upper body workout before I call it quits. Take tomorrow off as my rest day. I hope all of you get your exercise in today, your strength training, your water, and have a great Friday evening. See you later. Bye.